Do you remember the GameStop chaos that unfolded in 2021? Many of us witnessed it in real time. Retail traders from Reddit piled together to drive up the stock price of GameStop. The response of Robinhood, a financial app, was to lock the buy button for those retail traders. Well, certain two guys had a long, hard look at it too, and they were no random guys at that. One worked at Goldman Sachs, the other helped build Robinhood itself. Both of them watched and thought, this is broken and someone needs to fix it. That moment sparked the SEI network. Funnily enough, today their SEI token sits roughly 93% below its all-time high and could use a Reddit-fueled rally. Almost nobody's talking about SEI today, and that's why we need to talk about it. We're going to explore SEI's origin story, its unique technology, the tokenomics, the real risks, and the exact math on how many SEI tokens you would need to retire as a millionaire without having to rely on the functioning buy or sell buttons of Robinhood. So let's get started. This is not financial advice, always do your own research. Let's quickly introduce how it all started. It's 2021 and the GameStop short squeeze is unfolding in real time. Jeff Feng, a former Goldman Sachs banker turned venture capitalist, and Jay Jog, an engineer at Robinhood working on core infrastructure, are watching it happen. Jay watched firsthand as his own employer froze the buy orders for millions of retail users. Both landed at the same conclusion, and that was that markets were not built for the speed and fairness that decentralization actually required. They founded SEI Labs in 2022, backed by Multi-Coin Capital, Coinbase Ventures, Jump Crypto, and other big names in the VC world. So there they had it, Wall Street money betting on a chain designed to make decentralized trading faster than anything they'd seen before. The mission was to build a decentralized NASDAQ of sorts. SEI launched its mainnet in August 2023, built around a central limit order book matching engine baked directly into the chain. The same mechanism real stock exchanges use, not the approximate, slow, automated market makers most DEXs rely on actually. Layered on top of a parallelized EVM with its twin turbo consensus, SEI hits 400 millisecond block finality and targets 200,000 transactions per second with the Giga upgrade. Ethereum manages about 22. Today, the SEI token trades at around 7 cents with a market cap of approximately $500 million. Now, let's see what the tokenomics look like. SEI has a fixed maximum supply of 10 billion tokens. Right now, approximately 6.7 billion are in circulation. The remaining supply unlocks on a monthly schedule that runs until 2032. Every month, on the 15th, around 55 million SEI tokens enter the market. This means we still have a little bit of sell pressure every month. But these monthly unlocks are predictable, and historically, the price barely moves in the week afterwards, after each unlock. But the pressure is still consistent. What's missing that would change the equation is a burn mechanism. Unlike other crypto projects that have a deflationary model, SEI just doesn't have it. For the price to rise, demand must consistently outpace new supply. That's a harder race to run. The token does have real utility though. It's used for network fees, governance, and trading fees on markets built on SEI. And if you want to stake SEI, the yield it gives right now is about 6%. Not the best, I know, but currently better rewards than Solana, for instance, Polkadot, or Fetch AI. Let's look at what the chain is actually doing right now. SEI has processed over 5.6 billion total transactions across 105 million wallets. Daily transactions average 4.4 million. And when you rank it against every other layer 1 by daily active users, SEI sits at number 8 globally with 523,000 daily active addresses, ahead of Aptos and Near. And as I mentioned Near, my previous video is exactly on that protocol, so you might want to check it out too. Go see the Millionaire math with Near on the airdrops.com channel. Now, to be straight with you guys, SEI's TVL has pulled back hard. It peaked at $628 million in July 2025 and now sits at 64 million today. DEX volume is in a downtrend as well. Same thing with the active addresses. Truth be told, the ecosystem did build momentum fast, but has given back a lot. That's the honest truth. There's genuine growth, no doubt about it, in real-world assets, however. In just 6 months, the RWA value on SEI crossed 291 million. From treasury bills to private credit to private market funds, BlackRock and Brevan Howard tokenized funds are already live on the network via Kaio, confirmed by SEI's official blog in late 2025. The forward-looking catalysts are real, but not yet live. The Xiaomi partnership is confirmed, where SEI's wallet is coming pre-installed on Xiaomi smartphones outside China and the US, though the full stablecoin payments rollout hasn't launched yet, so don't get too excited just yet. Wyoming has shortlisted SEI as a candidate for its state-backed stablecoin, but the pilot currently runs on Solana. And the Canary Capital Staked ETF is active and pre-launch, sitting with the SEC. Not approved yet, but I'm hearing it's somewhat close. Still, right now, the ecosystem is rather contracting rather than expanding. And the bull case depends entirely, and I mean entirely, on whether these pending catalysts convert from mere announcements into actual activity. But before we get to the millionaire math, we have to address the risks about SEI. The first risk is the supply overhang. And what I mean by that is that SEI has 5.5 more years of monthly unlocks with no burn mechanism to offset them. For the price to go up, demand has to win that race, and I mean every single month it has to win it, and that's a big challenge. The second risk is the competition problem. SEI is trying to win the high-speed trading blockchain race, but it's running against who? Solana, Sui, and even Ethereum's layer 2s. Mind you, all of these already have deeper liquidity, larger developer communities, and a massive head start on ecosystem growth. So in that sense, SEI needs to consistently out-execute some of the fastest and most well-rounded chains in crypto, and that is no small feat. The third risk is the centralization concern. SEI runs with a maximum of only around 40 hand-picked validators, which raises serious decentralization concerns compared to other major layer 1s. A more centralized validator set means the network is, let's face it, more vulnerable to coordinated attacks or even censorship, which could be a red flag for long-term trustworthiness. Just to be clear, SEI is definitely not a scam. The technology is great, the usage numbers are real, and it has some serious backers behind it. But it is a project that launched into peak hype, has ground through 2 years of downtrend, and now needs some bullish catalysts to start making new higher highs. And if it does get these catalysts, then we're in millionaire math land. But before we check the numbers of the dollar signs and the multipliers, let's first quickly see the price history on SEI. It got listed in August 2023 at around 18 cents, dropped 50% to 9 cents, and then ran to its all-time high of $1.14 in March 2024. Well, since then, it has been in a prolonged downtrend, hitting the lowest price of 5 cents in March 2026. Today, it trades around 7.5 cents, and it is up over 50% over that low. Now, we will use 7 cents as our reference price for the millionaire math, and here it is. The bear case calls for 35 cents per token. That's a 5x from today and a $3.5 billion fully diluted valuation. To hit $1 million at 35 cents, you would need about 2,857,000 tokens, which cost roughly $200,000 today. Now, that's a significant bet, I understand, for a modest multiple. We're moving higher with my base case now, which aims at $1 per SEI. That is over 14x from the 7 cents reference. A $1 SEI implies a $10 billion FDV. The math for once is simple. 1 million tokens at $1 apiece to reach the $1 million. All that at the modest cost of about $70,000 today. Solid risk to reward if the catalysts land, of course. And at last, the bull case is $3 per se. That's almost 43x from here and reads a $30 billion FDV. You'd only need 333,000 say in exchange for just over $23,000 today. Aggressive, I admit, but the AI agent economy alone is estimated at over $200 billion potential market, and SEI is explicitly positioning itself as its payment rails. So, what actually needs to happen for any one of those price targets to become real? 4 things could change the equation, guys. First is the Giga upgrade that pushes SEI to 200,000 TPS, the kind of benchmark that actually moves institutional builders. Second, the Canary Capital ETF. If approved with its staking component, it opens the door to a completely different class of buyer. 3, the Xiaomi rollout. Once live, puts SEI in the pocket of hundreds of millions of users who never had to look for it in the first place. And finally, the RWA momentum, which is already building, by the way. $291 million tokenized in 6 months, with BlackRock and Brevan Howard already on the network. See, none of these are actually guaranteed. But if just 2 or 3 of these land in the same window, the monthly unlock pressure becomes a lot easier to absorb, if you get my drift. So, is SEI the sleeping giant of the L1 wars? A chain backed by Wall Street market makers, chosen by BlackRock and about to land in the pocket of hundreds of millions of Xiaomi users? Or is it another cautionary tale about launching into peak hype and then spending years paying the price for that? Let me know what you think, guys, and also drop your SEI price target in the comments, because I'm curious to see if you're as optimistic as I am. Maybe I'm too outlandish. Now, if this breakdown helped you, hit the like button, subscribe to the airdrops.com channel, and share this video with your crypto fam. Now, I'll see you in the next one. Ciao.